Hey everyone, welcome back to Daily Dollars. Today, we've got a crucial update that every senior retiree and future retiree needs to hear. Not only are new Social Security payments going out this week, but there's also a heated debate happening in Washington that could directly affect your wallet. On one side, lawmakers are proposing a $4,000 federal tax deduction for seniors. On the other, a bold plan to eliminate federal taxes on Social Security benefits altogether. These proposals could reshape how much money stays in your pocket every month, and today we're breaking down what it all means for you. Whether you're already receiving benefits, planning for retirement, or simply staying informed, this episode is packed with updates that matter. Before we jump in, go ahead and hit that like button and subscribe to Daily Dollars so you never miss an important Social Security or personal finance update. All right, let's get into it. For millions of Americans who rely on Social Security benefits each month, understanding the payment schedule is critical. The Social Security Administration follows a staggered payment system based on recipients' birth dates, ensuring that the distribution process is smooth and organized. This week, specifically on Wednesday, June 18, beneficiaries whose birthdays fall between the 11th and 20th of any month will receive their June payments. This includes retirees, survivors, and those receiving Social Security disability insurance. This is the second wave of June disbursements. The third and final group, made up of beneficiaries with birthdays from the 21st through the 31st, will receive their payments next week, on Wednesday, June 25. If you're new to Social Security or just want a refresher, here's how it works. If you started receiving benefits before May 1997, you are part of a special group that receives payments on the 3rd of each month, regardless of your birth date. If you began receiving benefits after May 1997, then the SSA uses your birth date to determine when you get paid. Birthdays on the 1st to 10th, paid on the 2nd Wednesday of the month. Birthdays on the 11th to 20th, paid on the 3rd Wednesday. That's June 18 this month. Birthdays on the 21st to 31st, paid on the 4th Wednesday, which falls on June 25 this time around. This structured system allows the SSA to manage payments efficiently and ensure funds reach beneficiaries in a timely manner. Now let's talk about the big question: how much can you expect to receive this month? The answer varies based on several factors, including your lifetime earnings, the age at which you claimed benefits, and any cost of living adjustments applied to your benefits. Here's a breakdown of what some beneficiaries are seeing in 2025 retired workers' average monthly benefit of approximately. Couples, both receiving benefits around $3,303 per month. Widowed mothers with 2 children, close to $3,653. Aged widows or widowers living alone, roughly $1,773. Disabled workers with a spouse and 1 or more children, about $2,720. All disabled workers, on average, $1,537 per month. It's important to note that the maximum Social Security benefit for someone retiring at full retirement age, currently age 67, is $4,873 per month in 2025. However, if you delay retirement until age 70, you can receive up to $5,108 monthly due to delayed retirement credits. On the other hand, those who claim early at age 62 will receive a reduced amount, approximately $2,831 monthly. This annual increase is tied to the Consumer Price Index for urban wage earners and clerical workers and is announced every October. For 2025, the COLA was set at 3.2%, helping to counter inflation. However, for 2026, early projections suggest a 2.5% COLA, according to estimates from policy experts like Mary Johnson of the Senior Citizens League. While this number could still change, it reflects a slowing of inflation compared to previous years. The official COLA announcement for 2026 will come in October 2025 based on third-quarter Consumer Price Index for urban wage earners and clerical workers data. We'll keep you informed as those figures develop. Beyond payments and adjustments, another issue dominating headlines is senior tax relief and the 2 major proposals on the table. These could dramatically impact how much seniors keep in their pockets each year. First up is the idea of eliminating federal taxes on Social Security benefits entirely. This proposal has gained renewed attention following comments from President Donald Trump, who indicated support for ending the taxation of Social Security. It's a popular idea. Many seniors believe that benefits they paid into for decades shouldn't be taxed again. But it's also controversial. Currently, Social Security benefits may be taxed if your combined income exceeds certain thresholds. Single filers with income between $25,000 and $34,000 may pay taxes on up to 50% of their benefits. Income above $34,000 could result in up to 85% being taxable. Married couples filing jointly face thresholds of $32,000 and $44,000 respectively. These thresholds haven't been adjusted for inflation in over 40 years, which means more and more seniors are being taxed as general wages rise, even those on relatively modest incomes. The other proposal comes from a group of lawmakers in Congress who are pushing a $4,000 tax deduction targeted specifically at senior citizens. This would be an additional deduction on top of the standard one already offered to seniors aged 65 and up. The goal is to reduce taxable income for seniors without impacting Social Security trust fund revenues as severely as a full repeal of benefit taxes. The deduction would begin to phase out for individuals earning over $75,000 and for couples over $150,000, focusing the relief on middle and lower income retirees who are more likely to be feeling the pinch of inflation and rising medical costs. According to several budget policy experts, this approach offers more targeted assistance and helps maintain the long-term funding stability of Social Security and Medicare, two programs that are already facing projected shortfalls in the next decade. While both proposals aim to offer relief to America's aging population, they affect different groups. The full tax repeal would primarily benefit higher-income retirees who currently pay the most in taxes on their Social Security. However, it could also reduce funding for the very programs seniors rely on. Meanwhile, the $4,000 deduction targets support where it's needed most and helps middle-income seniors who often don't qualify for other forms of assistance, all while protecting the solvency of Social Security. It's a complex issue, and both sides have strong arguments. But one thing is clear: these policy choices could have a lasting impact on the financial well-being of millions of seniors. So whether you're keeping an eye on your next Social Security check or thinking about how taxes will affect your retirement income, staying informed is the first step toward financial security. This week's payments are arriving for many Americans, and a 2.5% COLA is projected for next year, while lawmakers in Washington continue to debate how to provide seniors with the best tax relief possible. Let us know your thoughts in the comments. And if you found this video helpful, please consider liking, subscribing, and turning on the notification bell so you don't miss future updates. Thanks for watching Daily Dollars. I will see you in the next video.